In this video, I'm going to be discussing about the best trend reversal strategy that you'll be able to use with a supply and demand approach. So by the end of this video, you will be able to start applying this in your trading right away. Hey supply and demand traders, I'm Jonathan, the founder of Norfolk FX Trader, where I share with you my tips and tricks to becoming that better supply and demand trader. And as I said in the intro of this video, we're going to be looking at a technique which is that best reversal trading strategy that you're going to be able to apply with a supply and demand approach. Now in the first part of this video, we're going to go through and discuss the actual idea of looking with market structure, trend lines and weekly highs and lows, understanding the way the markets move. And then this second part of this video, I'll go through and we'll look at it with a supply and demand approach. So make sure you watch that second part of this video, as it's going to really help you to understand and see how the market's moving with supply and demand. So the first thing I want you to do, we're on the Euro-USD pair, and I want you to understand this part is crucial. I want you to mark off the previous weekly highs and lows. Now the way we're going to look at doing this is we want to see a previous high, like this candle high here, to have a lower high to the left and a lower high to the right. And it's important that if it's in a previous high, we need to see the last candle closing through the low of that candle. Now it has to close as a bearish candle to be really a good valid setup. So as you see, we have this pivot high here, and again we have another one here with the candles having those lower highs beside it. And then we have a reversal from this low, and again you can see we have a higher high to the left and the right, and we close above that candle with a nice bullish candle. And once again, we do have this one, but look at the way the market makes a higher low and a higher high to the right, but we didn't close above with a bullish candle until this next candle. So on this occasion, I would have not looked at this level to use it. And that's why we see the market dropping to the downside. Then we have this high here with again a lower high to the left, a lower high to the right, and we close down below this low of that bullish candle. So let's mark these off and we'll go through exactly how you'll be able to identify these reversal points. In fact, this is the best reversal trading strategy that you are going to want to use in your own trading. So the first thing we're going to do now is mark off these previous highs. We'll mark these highs off. As we see the market reversing, I'm going to mark off this low. And we could also mark off this high, but we're not going to mark it off the moment. I just want to see, to show you where the markets are moving. And a final one you could look at again. I didn't go through this one, but we had this low here, this low and this higher low. You can see we broke above that high. So you would have marked that as a area, but instead of a line, I'm just going to mark off with this line on my chart. So you'll be able to see when the market comes down to it. So that's all you need to do on a weekly time frame. Then we'll go down to a 4 hour, and I'm going to zoom the chart back out so we can see all of price. And let's have a look at this area right here where we see the market starting to drop down, pulls back and breaks through this previous low. Now when we're seeing a solid break like this of a previous weekly low, we know that the market is likely to continue to fall. And what I'm looking for is an optimal area to look for a pullback into. And this would be my optimal area. I'm looking for the market to pull back into my sell zone. Now the market didn't quite reach that, so then I would look at a lower time frame after we see the market breaking down. But the important part here is once you recognize these weekly areas, we're then going to look at our market structure. Now the market structure is going to be these turning points where you see the market dropping to the downside. We make these lows. So you want to be marking off those major turning points. So we have the market from this high, we drop, pull back, drop, pull back. And you can see the market then does drop down on a minor area of market structures broken, and that is down on a lower time frame. And I will look at this area in the second part of this video, because there's an area I'd like to show you here how you can use market structure with a supply and demand entry. Now there is 3 videos which will help you to understand this type of concept, which is the trends within trends in trading Forex, understanding market structure in Forex, and also the confirmation entry. Now I will leave those 3 videos linked above now, so you can go through and watch them after this video. So the market is key to understand where we're seeing it moving to. When the market breaks down, we create this low. Now there is a minor area of market structure in here on the lower time frames, but if we're based on this time frame, this is going to be the move down. So basically we're seeing this as our main move on this chart. So understanding that on a 4-hour time frame, this doesn't mean you can't go down to this area here and actually look at a lower time frame. As I said, we'll do this in the second part of this video. If you're not sure of this part, just rewind the video and go through and watch this section again. So now we'll carry on and we'll go from this low and we'll work our way up. I'm going to start showing you how you'd read the market as a reversal. Again, like I said, this is going to be the best reversal trading strategy that you're going to need in 2021 to help you to find these profitable winning trades. Now the best thing to do, you can mark off a trend line. This is going to give you that momentum break. As we can see, the market breaks the trend line there. Once we have that, we see the market pull up, pull down. We break this market structure. So you can see we make this higher low, we break out, we pull back, and we continue. Now there was a perfect entry there, understanding this strategy, which you'll find in the second part of this video, how you can look for an optimal entry. Now as the market continues to go higher from here, we can start marking out these highs and lows, which create our area of market structure. So again, we create those higher highs and higher lows. Now it's this area here where you are going to start to become subject to a manipulation in the market. Now if you're not sure what I mean by that manipulation, then keep watching, because you're now going to understand exactly what I mean by this. In fact, there is also a video which is called the false breakout strategy. I'll leave a link above now, or you can watch this video after this video and you'll be able to see exactly what I mean by when looking for that false breakout. But this area here is just a manipulation. So let's just go into this area. Let me mark this off and then we'll go into this area in more depth. We'll go closer into the chart and you'll see exactly why this was a manipulation. So we had the market from this low, we made this new high, we pulled back to this higher low, higher high, higher low, higher high. Now you could also draw a trend line that you could have drawn like this. We broke the trend line to the downside. Okay, so this is the point where you're thinking, we have a market reversal happening and I'm going to look for a trade to sell. I'm going to wait for that market now to pull back into my area and then look for a sell to downside. Now, if this is something you was doing, look what happened. The market rallied up and would have taken out your stop. Now, why did this happen? Well, let me reverse these arrows. And let's look at actually what did happen here. When the market dropped down, it broke this low and it broke this momentum trend line. And then we created this low, lower high, lower low, lower high, a lower low. Now, perhaps that's on a smaller time frame, but you could still draw this out on this time frame. It is making those lower highs and lower low sequence. But look at the way the market is starting to compress. You see, it compresses as it goes down into this area. And the main reason we're actually seeing a reversal here is based off this area of imbalance, which has been left in the market. Where we have this big push up on this candle, it left behind this area of imbalance, which needs to be filled to capture those orders. And that's what happens right here and that's why we see the momentum move back to the upside. There is much more imbalance in how I'm trading this type of strategy in a new course coming out called Forex Domination. Now, more on that to come later in the year, so stay tuned for that course if that's something you'd like to get involved in. Right now, there's also an advanced supply and demand trading course that you'll be able to get right now at a discounted price. For any of my subscribers in this channel, you can get it for a price of just $197 at the moment instead of a full price of $497. So if you're interested in that advanced course, and I teach more concepts in that course than I do on this YouTube channel, I will place a link in the description of this video if you wish to check that course out. Now, this area of imbalance, I may look at doing a video if you're interested on an idea of how you can find these imbalances on your chart and how you can actually trade them. But at this moment on this video, we're talking about that best reversal trading strategy, and this is how you can identify this. This is a great area to look for reversal. Now, we just remove all this off the chart. When we see the market come back down into here, we're breaking structure to the upside. But the entry we could have taken was off this low base of this area of imbalance. And if we go down to a lower time frame of a 15-minute, which we'll do in the second part of this video, is you'll find there was a perfect entry on a 15-minute chart you could have caught right here and caught all this move to the upside. So we'll go back to that and that first entry in the second part of this video. Let's carry on forward on this area. Let's just take the chart back out. And the next part I want to show you is we placed those weekly levels on the chart at the beginning of this video. Now, the reason I did this is to show you those optimal turning points in the market. Do you notice that this turning point, there wasn't a weekly level, but at this area on the chart, there was a weekly level. Now, this is the importance of a weekly level, because this is where those orders will sit above and below those previous weekly highs and lows. And that is where we see the market coming up into. And on this occasion, let me just remove this box now. In fact, let me just leave this box on here. And I'm going to put a box over this section so we don't forget to go over those trades. But when we see the market here, we break our momentum trend line to the downside. We also break market structure, these previous lows. You can see the market made this low, high, higher low, higher high, this higher low here, and we make this new high in the market. Now, it's this point here is where we eventually break through that weekly level. This is that level I placed at the beginning of this video. This is where the manipulation is happening. We see the follow through from that previous break, breaking market structure, which is key. And remember, understanding market structure you can find in those other 3 videos I suggested at the beginning of this video. We then break through, we make this low, and we pull back. And right here I'm going to go through in the next part of this video the use of supply and demand, how you have captured an entry off that level. But after this was key to understanding that the market was starting to reverse. We broke down, we pulled back, we broke lower, we pulled back again, and we've now broken lower once again. We continue to move lower. Now, on this occasion, there was some news come out. There wasn't a full pullback and a large drop to downside. To be honest, missing this type of move, yes, it will frustrate you, but don't let it get to you. Just let the market do its thing, and then we'll wait for the next optimal entry. So what do I mean when I say the optimal entry? Well, when we see these markets continue to drop and go lower, they tend to do the same thing over and over. You can see we come back into this entry level area on that first one. This is our range. We're marking from the high to the low of that swing. That is our range we're looking to trade with. We're looking for that pullback coming into this entry zone area. And that's where we're going to start looking for 1, a manipulation of price, 2, our area of supply on this occasion, and then 3, a confirmation entry if we want to, or a set and forget strategy entry. Now those two types of entries you can watch on either of these videos. I'll leave above now. They will teach you exactly how you can enter the market with a supply and demand approach. So as you can see, the market does fall down, pulls back, it falls down again, and this is the last time we had to pull back. It didn't pull back to that entry area. Now what do I mean? This optimal entry area did not get the pullback into that area. So we never would have looked for a trade in that situation. But understanding the key aspect here of this weekly level was the reversal point. And that is what we're looking for. Again, we can see this was a previous weekly low. So if this market was to come all the way down to this low and we see this type of price action with reversal, then you could look to go long. Now there's obviously this level here that we could project to this side. We can see we're now actually breaking through that level. So if we see the market running back up, pulling back, breaking market structure, then again we're seeing this type of price action and we can start to look to go long. So that is how you can look to use momentum, trend lines, look to use those weekly highs and lows as I went through in the beginning of this video, and how you apply market structure. Now before we go on to the second part of this video, I want to just cover market structure once more. If we see the market doing this, this is our typical bullish market structure. We are seeing the market making new highs and new lows. If we continue to do this, breaking previous highs, we continue in this uptrend. But if we see this happen, and I want you to pause the video and think about this question, would you now be looking to sell this market? And by that, I mean, would you have looked at this trend line being broken? Would you have looked at this previous area here being broken? And would you have looked for a pullback here to sell? I want you to think about this. Leave me a comment below and tell me if you would have sold here or if you would have waited and to look to take a buy again. This is crucial to understand the way the markets move. Now this is not a sell area. What you want to see is a type of price action which looks like this. That's key to understanding a real reversal, and that's the way you can look at a best reversal trading strategy. This is where the market has to break. Until it breaks this low, which would be this low here in the market, this actual price action here, then we see a true reversal, and then you can look for a pullback to sell. Let me remove these arrows. Right, so when we see this here, we don't actually break this low. And what is happening, this is just a retracement on the way back down, and that will be coming back into an area of demand where you'll then be looking for your optimal entry to capture a trade here to go long. Now with the use of understanding fib retracement with a true range area, it comes back into that optimal area, and this is where we use that confirmation entry or a set and forget strategy with supply and demand. I just want to go through that market structure technique because many traders who come to me with questions are finding this difficult to understand and they're getting in the market the wrong places. So I hope you've enjoyed watching this first part of this video. If you have, don't forget to give me that thumbs up. And if you continue to watch, you'll be able to go over and watch this second video, which will be coming up on your screen right now. And you'll be able to watch the second part of how you can use supply and demand with this best reversal trading strategy.